Good morning, good afternoon, good evening, wherever you're watching me today. My name is Peter. Welcome back to Invest with Peter. So today I'm going to be talking about, how the market react during world crisis. Last week I actually released an episode where I talk about the issues around bear markets and which sector you probably want to be looking at the right time. So I'll say if you want to go back, it's still on there now. You can check it out. I put out some sectors that you might want to be looking at this point. But today I'm going to be talking about a different one, and that is, how global market react during, world crises. And I will be starting from World War One up until COVID of 2020, what really happened, how low the market went, and the reaction of people on the market as well. So I'm going to be summarizing it. I'm not going to be dwelling it on much, but I'm going to be summarizing, and you probably pick one or two patterns that you probably see, okay, market goes down this way, these are how I need to do. I need to resize my portfolio. This the sector I need to be looking at. If you stay till the end, I'm going to be telling you, what I actually gained and realized at the end of this research, because it took me some time to, really bring this to a brief summary. But I'll be telling you as well, if you stay till the end, the sector you want to be looking at again and how to play this strategy, around what's going on around the world now, Russia invasion of Ukraine. Hopefully things turn around. Nobody wants war. Enough blood has been shed already during World War II, World War One. All this war around Cold War, Iraq War, Vietnam War and all that stuff. So we need peace in the world. But briefly, don't let me beat about the bush. Let me just go straight into it. Please, if you've not subscribed, please kindly do now. Subscribe to the channel. Help the channel to grow, and we'll be going around the world and people can learn one or two things from there. So today, let's start it. August 31st, 1912. It's been a rumor around the world that there's a prince in Austria that's gonna be like a very popular prince, and his name is called Francis. Prince Francis Ferdinand. And it's been prominent. He was a prominent prince, of Austria then. So market has been, saying the things that's going like, well, things might not be, going the way we want. A big, world crisis might occur at any point and all that stuff. So market started going down from 31st of August, 1912, and this led straight into when the First World War started. When First World War started in 1914, every major stock exchange, were closed for a few months. And what led to this? All right, what led to it was the prince I was talking about, the Francis Ferdinand guy, was the heir to the throne of Austria. Throne. So this guy was murdered by a Serbian guy called Principe or something, or what's it called? So this guy killed the prince, the heir to the throne, and Austria and Hungary, they came together and like, okay, the guy that killed our prince is from Serbia, so these two countries invaded Serbia. And when they invaded Serbia, Germany saw this opportunity, and Germany invaded Luxembourg and Belgium. So this led to world crisis, and straight away market went down 39%. So that led to World War One. So during this period, right, market was still going down. It didn't go down straight away, but it was going down gradually. And during this period, market was still going down because of the crisis was going on like that. So Germany invaded Luxembourg and Belgium, and the world let's form alliance. So the big Western countries came together: US, UK, Canada, Portugal, some African countries, South Africa, Rhodesia, France, some other countries like that. They came together and they formed alliance. Like, okay, let's stop Germany now, because Germany is going to be going haywire now. They're going to be exploding, invading every country. Maybe after Belgium's going to be France, that will be next. So they form alliance to defeat German invasion. So with all this, I don't want to go into much history, but this is what led to the markets, bear market during this period, which lasted up until from 1912 up until 1921. That's the longest bear market in the world that the world has ever recorded. So next one is the Great Depression. This war, actually, First World War, led to the Great Depression. If you still have a granddad, I think you probably want to ask him, sit him down and say, Dad, Granddad, can you tell me a bit about Great Depression? This is a period where people were lining up on the road, getting rations of food and all that. They lost their life, savings. People lost their job. So many people on the road begging, and so many, drastic things happened during this Great Depression that occurred as a result of the First World War. So during this period, unemployment rose to 25%, and almost 10,000 banks failed. The money drained, and so this was the period where a new president was elected in the United States called Franklin Roosevelt in 1933. He came back, and the market, started putting some policies into place. Economy came back after the Great Depression. So that led now to World War. So during Great Depression, market went down 75% from. The bear market started on the 31st. It's always 31st on this research. I don't know why 31st is an issue. So 31st of August 1929, market started going down, and up until 1932, June the 30th, 1932, market went down 75%, and that's still the biggest and the market has ever went during a bear market. So 75%, everything was brought to standstill. Hopefully nothing like that happened again. So World War II, not to beat about it, but World War II started again as Germany invaded Poland. So, and the world was like, we're just coming out of Great Depression, and Germany again came on the book again, with the leader, I don't want to mention his name, invaded Poland, and once again, world came back together again, United States, UK, and other Western countries came alike. They form an alliance to defeat, the German. If you want to know these, there's so many movies you can watch. There's so many books you can read that actually tell you much about the things you need to know about this war. World War II was a brutal one. Millions of lives were lost. So the market went down 39%, 39.75% during this time, and also post-war crisis. So after World War II, anytime there's a war or crisis, there's always a post-crisis that comes after that. So the post-crisis started 31st of May 1946 and up until 30th September 1949. Market went down again. Remember, market went down 39.75% during World War II, and post-war again, market went down 26.41%. So the world was in shambles. The economy was bad. People were struggling. Families they can't afford to eat 3 square meal anymore. There's so many issues going around. The economy was crumbling, from Great Depression to World War II and all that. So that's why we need to sort this out. The world needs peace at this point. So, and then the issue coming now from the Southeast Asia, the invasion of Vietnam. US invaded Vietnam, and it was a brutal war. I don't want to go deeply into this war and all that stuff. So the market started going down on 31st of January 1969, and the bear market stopped on 30th of June 1970. So it's always been a long pattern from 6 months to 7 months, 1 year, and even more than that. So my bear market, that's one thing you need to realize. Bear market is not like quick one. It's going to be bleeding slow and steady and all that. So Vietnam War, market went down minus 25.39%. I don't want to go much into that. So that led to another crisis, which is OPEC 1 and OPEC 2. OPEC is Organization of Petroleum Exporting Countries. So these are the countries that produce, petroleum and petroleum products. So this company, they made an embargo on the world in 1997. This is when the oil boom happened, and every oil producing country where we're raking in cash and all that stuff. So they put an embargo on the world that, well, we have to increase oil now. So as a result of this, the price of oil jumped from $3 to $12 overnight, and within weeks the price of oil jumped to 40%. That crumbles the economy straight away. And the rate was increased at this point 11.5%. Did you hear that? 11.5%. The rate was increased, and this followed straight away. What's coming. The recession came in. Because of that, people can't afford to drive their vehicle because they can't afford the fuel price and all that stuff. Energy price shot up. People can't afford to put lighting and all that stuff. So this actually affected mostly middle class. And if you follow the pattern of oil, energy, and all that stuff. So these are the reason why, as an investor, you need to know the patterns that you see around. When you see or hear about crashes coming, you know what's coming. Your portfolio need to be protected. You need to be moving from growth to value, right? So this followed by recession. Eventually, stock market collapsed totally. The price of oil went from, like I said, from $3 to $12, and within weeks it went to $40. And guess what? Market went down minus 40% in just within months, like that, straight away, minus 40%, and that happened on. So it started 31st of March, 1973, up until September 30th, 1974. Then following year again. So that crisis lingers for up to like 2 years. So again, and market were able to bounce back a little bit, but straight away went back because there was OPEC 2 as well, OPEC 2 crisis. You can read about this on your history book and all that. So you can see, Google it, you're going to see what I'm talking about. So OPEC 2 happened again, where market went down straight again, minus 24%. So following year again, so that's from August 31st, 1987 up until 30th of November 1987. That's just within a month, market went down 21.96%. That's really bad. So now there was a crash that happened in 1987, right? Sorry, the OPEC 2 was 1980. Sorry, OPEC 2 was 1980, November 30th of November 1980 till the 30th of June 1982. That's when the second OPEC crisis happened, which market went down 24.62%, if I'm not mistaken. So that crisis has been, the economy was crumbling. Investors were all over the place. Like people, you hear a story of people jumping from 3-story building, 5-story building. Livelihood were lost, and people did it. Some company never recovered. Some family never recovered from these, so many suicide issue and all that stuff, because they left some people. That's why I always say, when crisis is coming, you want to stay away from leverage and margins. You don't want to be investing with margin. You don't want to be leveraging at this point. A bear market is a bad place for you, where you think you can leverage. You don't leverage in a bear market. You go long in a bear market. I'm still going to come to that. All right. I'm just want to summarize this whole thing in just a couple of minutes, under 15 minutes, just for you to understand what I'm talking about, right? So that led to 1987 crash. That 1987 was a confusing crash. Even analysts were wondering what caused. Not a bit of, catalyst led to this crash. So this crash was like, they were wondering that the market just crashed unexpectedly in 1987, and that was like, market went down minus 21%. And we're like, what? Market just went down straight away. So at the end of the day, they did the research. Okay, what actually led to this research, to this market crash? And they discovered that because Dow Jones. Listen to this. S&P went down 20% within a day. 20% in a day. Dow Jones went down 22%. Every stock in the world, global stocks, went down, except the Japanese stocks, right? So crash was Hong Kong at minus 50% in a day, France minus 45, Germany minus 46, and that's how the whole country, world, economics and stock exchange went down. Analysts couldn't determine what really happened to this and what really led to this, crisis. But some people were saying because still the oil issues, so international oil disputes. So it was said like, it was a result of international oil dispute, OPEC countries going against the price of oil and all that stuff. That's what led to it, and attempt to manipulate foreign exchange. So these are the things that they said caused this market crash. But it didn't. It was just within a month. So it started August the 31st, 1987, and actually market started bouncing back from 30th of November 1987. Just within a month, market went down almost 45%, in some country 50%. S&P went down 22% in a day. So just random crash you have like that. So that's now we have Iraq war, right? This is where Iraq actually invaded Kuwait. So Iraq invaded Kuwait, and the same day that when market went down straight away, minus 24.30% as a result of that. So as you're following the trend, anything invasion, crisis, market always go down more than 20, averagely minus 25%. So if Russia, Ukraine actually, eventually happened, expect drastic, market tumble and all that stuff. So now Iraq invaded Kuwait, and that was 1990, if I'm not mistaken, August the 2nd, 1990, right? So they invaded the place, and American president then George Bush. So it was like, we need to rally around Kuwait and just put Iraq out of that country. It's not possible. Iraq cannot be invading country within the Arab world like that. It's not possible. So they rallied around Kuwait, and Iraq and Kuwait was liberated from Iraq just within couple of months. So on February 1991, Kuwait was liberated, and that was the end. So market went down minus 24.30%. So now the biggest of the bubble, internet bubble. You must have heard about the bubble, when it actually destroyed so many lives. That happened in 2000. So year 2000, it started around 1999. It started briefly 1999 towards year 2000. So 31st of March 2000, right? The internet bubble, started busting, and market started going down, and market was down 49.66%. Why was that? Because people were investing in this new internet of thing. People were like, all this Canon, all this technology was coming in. People were saying, yeah, we're going to be using the internet, this and that. You see ourselves on a mobile phone. So people were investing in random, just like people are investing in the future. We're investing in growth stocks now. This company is going to do well in 10, 15 years. So people were really, investing and highly leveraging themselves in this company. But all of a sudden, the bubble actually went boom, and everything went down the drain. And so many people companies never came back. Families was destroyed. Wall Street analysts committed suicide because they lost it all during this bubble. 49% market went down as a result of that. So now that's when 9/11 happened. September the 11th, 2001. No one in the world will forget that. So the same day, when immediately that happened, Wall Street Center was attacked. When the first one was attacked, market was put on hold. So the market was put on hold, and briefly, because no one was able to understand what was going on, whether it's going to be affected. So all other stock exchange was closed. London Stock Exchange was closed just in case, because no one knows whether all the countries, trade centers is going to be affected. So all global stock exchange were closed for the day for that period of time, and market went down just minus 7.2%. But that's just within a day. All right, within a day, because of that, market went down, straight away, and S&P was closed. Dow Jones, everything was closed for the day because of that. So that, without beating about the bush, let's go to financial crisis, 2008 financial crisis. Wow. So before I go on there, during the 9/11, gold price actually spiked upward from 215 to 287. So watch out for gold when there's crisis and all that stuff. You want to buy, real gold or paper gold, start looking at that at this point in time. So, gas price spiked as well, same day, because anything go, bam, gas price is going to go up. So if you're investing in energy, I'm still going to talk briefly about that. Energy, you need to be looking at that as well. So all these crises. So now the financial crisis happened. Housing markets was about going to, get, destroyed, and Fed realized this, and they started, trying to battle around it, trying to save, banking system, because some banks were going for closure. They were like, okay, we can't afford this anymore. We ain't got any money. Central banks were scared of borrowing banks because banks were going down straight away. And, mortgage, where people who had mortgage were like, they can't afford to pay the mortgage anymore. So Fed was trying to secure, the financial market just to bail out these people, but they can only do much. So market actually went down 54.77% at this financial crisis. That was a bad one. That's second biggest crash after the Great Depression. So market went down to 54.77% in 2000. It started 2007. So by 2008, 2009, market recovered from that. And the last one is 2020. So that's when the big Ronnie Rona crisis actually happened when the world they woke up to lockdown for the first time, and people were wondering what actually happened. How are we going to navigate this? Why is the world going down, and all that stuff? So market was down straight away, and before we know it, market went down 40% just because countries were closing down. The virus coming from China, no one knows. The fear, the fraud was there, and people were wondering how long is it going to happen? How will the economy recover from this and all that stuff? So, market went down straight away 40% just for the period of from 28th of February 2020 up until the 7th of April 2020. So the Fed came out, they bailed the market, pumped the money, started buying bond, and market went up from there. So now Russia-Ukraine invasion. If this actually goes ahead, hopefully it doesn't, but if they go ahead, actually expect at least more than 5-7% the very first day. So how do you want to plan to do that? Well, the way I want to do the strategy I actually discovered from doing this research is I discovered that market always come back. Stay with the value stock. Growth stock is not probably a safe haven for you at this point. You want to stay with the value stock, consumer staples. People will still buy Coca-Cola. People will still buy PepsiCo. People will still buy, Pepsi. All right. So not PepsiCo. People will still buy Pepsi. People will still buy McDonald's. People will still eat. Walmart is going to be there. People are still going to go shopping anyway, regardless. People are still going to eat regardless. So consumer staples and all that stuff. Energy is there as well. Check energy, companies, whether it's Chevron, Devon, and all that stuff. So, and energy companies that pay dividends. So you want to get into dividend stocks as well to protect yourself, because you don't know how long or how, this is going to linger. So it might be short and brief one. But the very first day this happened, expect market to grow. Don't do anything that very day. I think that very day, if it happened, hopefully it doesn't. If it actually happened, I'm not gonna check my portfolio that day, because it's gonna be a discourage. I know it's gonna be like a disaster. The whole market go down. So I don't want to see that at all. I'll probably close my laptop and not checking it that very first day. And I've been preparing my portfolio towards that as well now. So I'll probably go long. The best place to be is stay long in the market. Don't swing at this. If you want to swing, be careful, because if you gamble and things go sour, and you're going to be losing a lot of money this time, because the bear market, some people never recover from it, and some companies never come back. So stay with the value, companies and dividend stock that's still going to be paying regardless of how long or how low the market goes. So friends, I've come to the end of this show today. Hopefully you've enjoyed one or two things from this. So if you've not subscribed, please kindly do. I am Peter Hards, and I will see you on the next one.